an opportunity for low to moderate income households to invest in their future. These low-interest, no-down payment mortgages are specifically designed for individuals to buy the property of their dreams outside the rat race of the big city. But they're not perfect for everyone, and they come with more than one catch. What is a USDA loan? Although you might not associate tractors and beets with homeownership, the United States Department of Agriculture's mortgage program is one way the government improves the economy and quality of life in rural America. The first iteration was introduced in 1991 as the Single-Family Housing Guaranteed Loan Program. This program was designed to boost homeownership rates in rural and suburban America among low and moderate income homebuyers. Since then, various updates have expanded opportunities even further through the USDA Rural Development Guaranteed Housing Loan Program. Depending on your specific loan, these government-backed debts can be used to purchase, construct, and renovate homes in eligible areas. USDA loans are unique among most mortgages in that they offer low interest rates to even buyers with lower than perfect credit scores, don't require a down payment, can have repayment terms up to 38 years for eligible applicants, have capped upfront fees and private mortgage insurance. But to qualify for a USDA loan, you must meet specific terms and conditions. How does a USDA loan work? USDA loans are mortgages either backed or handed out by the USDA, meaning that the government will cover the debt in case of default. These loans go to low to moderate income families under one or two primary programs. Number 1. Single-Family Housing Direct Home Loans. Provide assistance to low and very low income applicants to repay their mortgage. The USDA funds these loans directly, hence the name, Direct Home Loans, for Americans who can't access financing for adequate housing by other means. Number 2. Section 502, Guaranteed Rural Housing Loans. These go to low and moderate income applicants who want to purchase homes in eligible rural and suburban locations. Qualified applicants may receive up to 100% financing, meaning no down payment required, as long as they meet income and geographic limits. Now that we know what USDA loans are and how they work, you may be asking yourself, how do I qualify for a USDA loan? USDA loans are designed to give individuals and families who can't access decent, safe, and sanitary housing by traditional means. Applicants have to meet certain requirements, such as being legally eligible to sign up for a loan and participate in federal programs. Other requirements include: Number 1. Location. Homes financed by USDA loans must reside within eligible rural or suburban areas, usually defined as regions with a population at or below 35,000. The USDA provides a map so that you can check eligibility by address. It's also important to note that the USDA doesn't designate a blanket mortgage limit. Instead, the maximum mortgage amount varies according to the cost of housing by location. For instance, home buyers in some parts of California may qualify for mortgages up to $500,000 or more, while buyers in the rural Midwest may see mortgage limits as low as $100,000. Number 2. Income. Because the cost of living varies from region to region, income limits are set based on where you live and your housing size. Typically, you must have an adjusted income within 115% or less of the low-income limit for the area. Bring in a dependable income. Self-employed individuals can qualify with a history of regular cash flow. Be able to show you can make your mortgage payments without incident for at least 12 months. Number 3. Credit score. The USDA requires that applicants have a clean credit history for at least 12 months. In other words, no accounts that have gone to collections. The program may make exceptions for individuals with marks caused by temporary or emergency circumstances, such as medical debts. Additionally, applicants with a credit score of 640 or higher receive streamlined processing, while lower credit scores carry more stringent underwriting standards. Those without a credit history may qualify with non-traditional references such as history of on-time rental and utility payments. Number 4. Residency. The USDA requires that applicants hold citizenship or eligible non-citizen statuses, such as being a non-citizen national or qualified alien. Now that we know what the requirements are, let's cover the different types of USDA loans available to you. We looked at the 2 programs that issue USDA loans, but these loans also come in different flavors, so to speak. Number 1. Direct USDA Loans. Direct USDA loans are issued by the government for low and very low income applicants. While thresholds vary, it's not uncommon to see income limits of $17,000 per year or lower. Direct USDA loans go to borrowers who can't access financing any other way and are without adequate residence. As such, they may carry interest rates as low as 1% for borrowers with credit scores hovering around 640. Because of their special terms, USDA loans come with strict requirements on a person's residence and income, such as homes under 2,000 square feet, properties with market values below the area loan limit, a total monthly debt-to-income ratio of 41% or below, including the mortgage payment. Number 2. USDA Home Improvement Loans and Grants. USDA Home Improvement Loans and Grants are financial awards for low-income homeowners who need to repair or upgrade their homes. This program may combine loans and grants for up to $27,500 in assistance. Number 3. Guaranteed USDA Loans. Guaranteed USDA loans guarantee or back a mortgage issued by a participating lender, similar to how Federal Housing Administration and Veterans Affairs loans work. These USDA loans allow homeowners to access low interest rates even at 0% down, though you may have to pay the USDA's mortgage insurance fees of 1 to 2% of the total loan amount, plus 0.35% annually for the life of the loan. How do I apply for a USDA loan? Applying for a USDA loan is usually fairly simple. How long the process takes ranges based on fund availability, loan demand, and credit score, though the USDA processes applications in the order they're received. To get started, you can use the USDA map to view eligible regions, loan income limits in those areas, and other requirements. Then, you can apply for a USDA direct loan via the USDA Rural Development Office. Prepare to provide proof of citizenship or legal resident status, your last 2 years of pay stubs and tax returns, documentation of your bills and financial obligations, your credit report or records of alternative credit history, such as rent or utility payments. If you're applying for a USDA guaranteed loan, you'll need to reach out to a USDA-approved lender in the area you want to live. The lender will process the application through the USDA. To find an eligible lender, you can go through a real estate agent or visit the USDA Rural Development site. Let's summarize what we've learned so far. USDA loans make purchasing a home more accessible and affordable for those living in qualified rural areas. While you still pay fees and closing costs, the low interest rate and lack of a down payment make these loans more affordable than even other government-backed programs. As such, for very low to moderate income singles, couples, and families, a USDA loan can make securing your dream country home more affordable than ever. If you like this video, then be sure to hit the like button, subscribe, and join us every week as we break down personal finance topics in plain English. See you next week.